Okay.
Good afternoon, everybody, and thanks for joining us today on this beautiful Thursday. I know there's probably better things you'd like to do, but this is one of the things we at the Fishtown Business Improvement District pride ourselves on is we want to try to make sure that we're providing our stakeholders, business owners with the best in opportunities and benefits that maybe other corridors cannot do or provide. And we were fortunate in getting to know our friend and colleague, Mark Goldstein of Goldmark Benefits. And Mark is joining us today. How are you, Mark?
Good. How's everybody?
Oh, great. And to try to formulate a way that we know our business owners here, especially during these, difficult couple of years with the pandemic, want to try to find ways to incentivize and keep employees and, if possible, provide reasonable health care for them. And that becomes more and more difficult as we go. And in talking to Mark, we wanted to be able to set forth something so that you could provide cost competitive, dare I say, affordable health care for your employees. Right. And more importantly, if you are a stakeholder of the Business Improvement District, that some of that can come, actually any savings can actually possibly come back via a way of a sponsorship that would help in giving you some relief on what's being paid. So there's really benefits all the way around. So we launched this probably during the pandemic, I guess, and never really had an opportunity to bring everybody together. So before we thought we started doing some things in person, we knew we hadn't touched on anything in a while, and the sun is out, so we're going to take that as a good sign, regardless of mask mandates to come on Monday, that we're moving forward. So I wanted to let Mark kind of talk a little bit first off about who he is, his team, what he provides. Certainly, one of the things we love about Mark is he and his firm has over 30 years of benefits experience that specializes in small to medium-sized businesses. So his concerns are for business owners and their employees. And I can say also, as a client, when I came here and had to get new insurance, that he was a whiz in finding me the same care that I had from leaving my other job at less money. So Mark, kudos to you, because I don't know how you did it. So why don't I turn the floor over to you? And then at the end, I want to kind of give some legislative updates for those that don't know. In my prior life, I spent many years, sounds like a prison sentence, in the House of Representatives and City Council before that. And maybe some ways that we all can work together to advocate for to our government officials to ensure that they are not doing things to decentivize an employer's ability to provide, or especially to ensure that they don't tax an employer's ability to provide affordable health care. So, Mark, I'm going to turn the floor over to you. Thank you.
That's fine. Okay. Thank you, Mark. So we had actually discussed this probably a couple months prior to the pandemic and put some things together. So I guess it's been a fast 2 years. And I guess we can't debate that health insurance is expensive. And it's a scenario where it is what it is. What we've put together is a program for the stakeholders that we work with closely held businesses with a couple employees, basically up to 100 in terms of the full timers. And that's our niche. That's what we've done. I started at 22 right out of college, and I turned 56 soon. So it's been a few years, time flies, and all that other good stuff. What I think you'd want to know from the get-go is that what we're trying to do is put programs in, and Mark was very kind in his words. I can't save everybody 20% on their Blue Cross coverage. It does not exist. But what we can do is, and what we have done is that if a business in the business district, can I just use that general term, Mark?
Yeah.
If you're part of the business district, and I'll use as an example Skip Schwarzman, because he's in the program for Front and Palmer.
Catering.
Yeah, Feast Your Eyes, Front and Palmer. and Al, Greg, Greg Root, Nick Kennedy, Soraya, Badia, and so forth are also part of the program that we're discussing today. In a nutshell, what we're doing is beyond, Mark had mentioned health insurance, which would be with somebody like a Blue Cross or an Aetna. Those businesses also have other things with us, like dental insurance, without getting into specifics or discussing anything private. So anything that you have with us that's tied into employee benefits. So I kind of got generous with it, Mark, in that I took everything that I kind of put it in the package. So businesses today, and if they want to offer, and we broker, solicit, and service your Blue Cross, Aetna health insurance, United Healthcare. With some companies, we use gap insurance, which I'm not going to bother you with what that is over the phone, over the Zoom call. There's dental insurance. There's some businesses that offer through us group life or disability coverage. Maybe it's for everybody, and maybe it's just for select people. And I'll get into some brief case studies of what I'm referencing, where you can, I'll use the term carve out. And especially if you're, I kind of did a survey. So if you're in the restaurant business, or you have a staff that's, some of them are key people, they're full-time, and then there's others that are part-time, you can kind of mix and match, and to a degree be selective, so you're not offering it to everybody. And it's not cheap to run a business today. But what we did basically is we put a program together, we dotted the I's, crossed the T's, and so forth, that if you're using Goldmark, which is I think the marketing term is the preferred, I'm a marketing partner of the business district, we're able to, as a stakeholder, we're able to pass on savings through Mark towards your dues, if that's the correct term, Mark.
Your assessments.
The assessments. So we're able to lower your cost in a certain way. The business district is able to benefit, and obviously, if we're getting your business, we're benefiting also. So we put in a partnership that benefits everybody. And by coincidence, after 30 some odd years, we kind of know all the angles, legal angles, I don't want to imply otherwise, that come into play with employee benefits that are good and bad, and what you can and can't do. And, based on the demographics of your group, whether your insurance is better through a Blue Cross or an Aetna program, and, what can we do to maximize benefit for the least amount of cost, and things along those lines. So I know I'm being general, but I'm also saying that I'll use Skip or Greg and Nick as an example, that they are saving money without getting into amounts, but we make contributions on a quarterly basis. In the first week of each quarter, we look at the 3 months prior on the businesses with us, and we do things accordingly. And it's benefiting them, it's benefiting the district. And what we've really done is, years ago, there used to be, if you had your health insurance with Blue Cross through the Chamber of Commerce, you kind of got a discount. And we've kind of recreated that in a little more modern way that benefits you as a business owner, and it benefits the district. And if we're benefiting the district, then we're hoping that it, what's the term I'm looking for? But it's got a multiplier effect, that if we're benefiting the district, it's benefiting you because you have a business in the district, and everybody wins. And that's really what we're trying to accomplish. I can answer any questions along the way, but really that's what that's the gist of it. Is we're trying to recreate an association type plan in a modern way, and we tied in the business district with it, so that I don't want to repeat myself, but that everybody wins. And that's what we're trying to accomplish. And we probably would have been 10 steps further down the road if it wasn't for the pandemic, but I wasn't going to solicit everybody through a pandemic with everything you've had to deal with in the city. So to make everybody aware of it. A lot of the things we're seeing, I don't mean to ramble, but I think I looked up a little bit some of your profile. I know that some of you know that it's hard to get help, especially if you're in the restaurant business or you have a bar of sorts. To get somebody and keep them is a little more challenging and a little more expensive today than it was, we'll say, prior to the pandemic and inflation and all those things. And we are getting, separate from your group, we're getting calls from people that are in some type of service business, restaurants and things like that, where they've never done anything in the past and now they want to do something. What can they do because employees are asking, and what can they do that's affordable, and what's everybody else doing, and kind of what's the lesser of the two evils, doing nothing or doing something to keep them. It's going to cost me money, but then I don't have to deal with turnover. And those are things that if you're on this call, you're probably dealing with it in one form or another. It's kind of a common theme, and that we're all kind of in the same boat, that in terms of managing and compensating employees, it's gotten a little harder and a little more expensive just to get them back and then to keep them. So I kind of just want to give a shortened version in terms of what we're doing. And I think what Mark's really wanted to start the rollout is, what can we do to help you save money? Is there potential to do that? And is there potential for additional savings in terms of what your assessments are through the business district?
Thanks, Mark. And I think to clarify, one of the good things, wonderful things about this, and you made a great reference to the old Chamber of Commerce plans that they used to do years ago, was, we really want to save our stakeholders, people that pay into the business improvement district, save you money twice, hopefully to lessen your expense for, health, medical or, employee coverage, as well as to what you pay to the bid. So it's kind of a win-win there. Quick question to you, Mark, just from an industry perspective. How has the pandemic, and certainly we've been in this since, March of 2020,
Sure.
how has it affected the ability for people to get insurance and certainly the costs for that? And I know we're talking general.
Well, I don't want to say anything too bad about Blue Cross, but especially since my daughter's interning there this summer, but they don't lower rates. If you have a group of employees that are healthier, we look for alternatives with somebody like an Aetna, that the pricing's a little more aggressive, and we use Blue Cross really as a backup because they accept everybody and it's a set price. So things, things laid low through the pandemic. They raised the rates or they held them flat, depending on the scenario. And now they kind of use it as an excuse that, well, now we're getting all these claims and we have to deal with them. But there are programs where there's a little more transparency, so they can't hide as much behind general statements. We use carriers like Aetna and United Healthcare, which are two of the three biggest in the country. So in answer to your question, everything changed, but nothing's changed. The process is still the same. It's a matter of us kind of just grinding out with a specific client or potential client, what do they have? What do they like and dislike? And knowing what we know, what can we do better without telling people that can we save them money for the same exact thing? Or can we spend money and get something better? Or sometimes we can do both. And we don't want to be in a situation where we're telling people they have to change doctors and OBGYNs and pediatricians for the kids and things like that. So it's really, I want to tell you things have changed. They haven't changed. The issue is that it's just more through COVID, it's more relevant and people are more aware, and the government's aware. A lot of people got PPP loans, and part of what qualified is having the money to make your payment to Blue Cross or Aetna. That was factored in. So we have that. We've done some things have come up where people are concerned about going out. They own a business and maybe they have a partner. They're not maybe as concerned as much about dying, but what if I get really sick and I can't come back to work? How do I keep getting paid, or what's going to happen with my business? And so those things come up, and we're working with clients about maybe updating their buyout agreement. Is there a way to do it really inexpensively without covering everybody, and using group insurance like group disability and things like that? And those are things that are more prevalent or more out there today than they were a couple of years ago, just because you turn on the TV and everybody seems like, if you watch the news, everybody was in the hospital. And I'm not downplaying it, I'm making a statement. Especially I'm out here in the suburbs, so it's not as dramatic here in the sense as being in the city and you have a mask mandate. So I do obviously understand that.
Mark, is when you win, and obviously each each plan is different, each business is different, so what you're going to do and recommend would be different. Is there a minimum amount of employees that a business has to have in order to qualify for
Thank
any
you.
of
That's a
this?
good leading question. So I had some notes. I was going to, depending on how we played this out, some case studies. So I'll just use as an example. We got a phone call from a small business in the Northeast yesterday, and somebody owns a business, a small restaurant, and there's there's maybe a dozen part-time employees. There's 2 full-time employees. They have coverage through their spouses, and they have an individual policy with Blue Cross. Somehow the bill got lost in the mail and they got dropped because they have I'm going to call it Obamacare. They have it through Penny, the exchange, and they can't take it back. What they didn't know is that if you have a 1-person business, we can go to Blue Cross and put in a group plan. So the call was yesterday. We're doing something for May 1st to help them. And by coincidence, aside from their coverage got canceled March 31st by Blue Cross, they'll have a 1-month lapse, but the new rate will be 10% less expensive than what they paid for the same thing individually. Because 90% of the time, group rates are less expensive than what somebody would see on the exchange, assuming they're not getting a discount or a subsidy based on income. So it could be a 1-person business as long as they have somebody that gets paid a W-2 that waives off a plan. You can get group rates with Blue Cross in particular.
And just in general terms, and certainly I want to make sure to open it up to everybody. Obviously, you have access to whoever sells insurance in the Commonwealth of Pennsylvania.
Yeah, I mean, in the Philadelphia market, there's 3 main carriers. Obviously, Blue Cross at 19th and Market has the largest share. The other 2 carriers that are players, though, are significantly bigger than our Blue Cross franchise. They're like 1,000 times bigger, Aetna and United Healthcare. So they're both large companies. They're diversified. They offer things like dental insurance. We don't necessarily use them. There are other carriers, but whoever's a player, I prefer not to get involved with companies that I have to worry they're going to be on is 2020 still on the air, or 60 Minutes that, we insured somebody's business and their employees for health insurance with some fly-by-night company out of Texas. And I'm not looking to get involved in those scenarios.
Sure. No,
so plus from an ownership standpoint, and I offer Aetna here to my employees, if you have good people and you want to retain them, you kind of have to offer things that are in that regard that are name brand.
One of the things I know for a lot of our employers, they want to make sure that there's coverage for our mental health issues.
Mm-hmm.
How is that factored in? Does that change cost, et cetera?
No, it's all covered. A lot of the providers do not participate in the networks. So the coverage has gotten better, but you have to go to somebody that's in the network. If you have a plan that's an HMO with Blue Cross, Aetna doesn't offer them anymore. So it would really be with Keystone. You have to go to somebody in the network because you can't go out of network. But we use, depending on the situation, we offer plans that have out of network coverage. So we're all Philadelphia, so you'd see the ads for Keystone, but you'd also see Personal Choice that'll have an out of network option. There's a high deductible, but we use something separate called gap insurance. There's programs with Nationwide and Chubb where we'll package it and somebody can get, I'll call it gold level coverage for the price for 10% less. I can't say silver, but let's call it silver plus. And those plans will reimburse out of network coverage. We can, if a mental health, so if a visit is $100 or $150, we can get 50% of that back through the gap coverage. And we have people that we file claims for regularly, and they're there once a week at 150 for the visit, and we get them back 75 of it. Is basically what's happening.
Awesome. 2 more from me that I want to open it up.
Sure.
Through the pandemic, I've noticed a word or concept called telehealth.
Mm-hmm.
What is that?
I haven't tried it yet. Actually, my wife did. Basically, like we're on a Zoom call. You have a Zoom call of sorts with your provider, and the insurance company's saving money. So instead of your copay being $50, it's $30 for the visit. That's what telehealth is. Maybe I'm dumbing it down on a third grade level,
No,
but
that's
you
perfect.
don't go to the doctor's office. It's a Zoom call, you know?
And what is I've also seen this, a health savings account. What is that?
A health savings account is basically if you have a high deductible plan. And so what the government does is they let you set aside money pre-tax into a side fund that they call an HSA, health savings account. And you can use that money to pay for claims that come up through your Blue Cross or Aetna plan with a $5,000-$6,000 deductible. There's other things that'll be eligible, like dental claims and things like that. So there's a lot of talk about them. At the same time, you're saving money in the cost that you send the insurance company, but when you have a claim, you have to lay the money out. So we use them or something like that in a scenario maybe where the employer is paying 100% of the cost, which is pretty rare today. With a lot of people that are rank and file, the issue is then they say, what kind of insurance is this? Because we are Philadelphia. I'm going to make fun of us in the sense that we all still want our $2 copay. And for those of you that are in my age bracket, you want the Apple also from US Healthcare besides your $2 copay. I don't see anybody necessarily smirking except for Mark, so I know we're close in age. And my point is that the concept is out there more nationally than it is in Philadelphia. It has its scenarios. We do look at it depending on, because it's a form of self-insured. I have some clients that we use that, and they pay the claims as they come through. They don't necessarily give the employees the money, but it's a side fund, is my long-winded answer. You use that money to cover your claims.
Last question from me, guys, and thanks for your patience, but kind of opens up kind of topics for conversation. Are there any trends you're seeing or you're hearing from government that may affect the health insurance industry, whether it be in raising costs, premiums, anything like that?
The insurance companies are always going to look for an angle to raise costs, or it's just, they want to make their 6%. They won't come out, and Blue Cross will never tell you what their profit margin is. Aetna 20 years ago did put out there, hey, our margin's 6%. We charge $1, and net of expenses for everything, we have 6 cents left over, which is pretty good considering how much they bring in. Just think about how much you pay in premiums. So, in terms of trends, I think there's been a trend nationally from the politicians, national health care, things like that. I don't know that that's really ever going to come to pass because we're just kind of in a scenario now where the employer coverage is there. It's expected. There's always talk about getting rid of it. The exchanges have helped certain businesses in certain scenarios, but I don't really foresee anything on the horizon. And the reality is, how much is our debt right now? 30 trillion. It's more than 30 trillion. So are we really in a position, and I know somebody somewhere will debate me, but are we fiscally in a position to nationalize it and take on more debt? And are people going to vote for that? Especially with high inflation, and to tell people you're going to raise taxes. And I don't, I think a lot of it is talk, and then push comes to shove, and the moderates used to be out of style, and I'll get up the soapbox. I think being moderate's coming back into style because the extremes are just too extreme.
Thank you, Mark. Let me open it up, guys. I know we threw quite a lot out there, and certainly the first and initial concept is how we can help you and your employees. So any questions for Mark?
Yeah, hi, Mark. It's Paul here.
Yes.
Thanks for explaining some of your packages and some of the process that you've helped smaller businesses do. So how is it that we get the value in the bid? Is it like the bid a pass through? I mean, would you look at our companies for individual packages and then we would just pass through the bid to get the value or the discount, or how does it kind of work as a benefit to us?
Basically, you would in theory keep doing what you're doing,
Mhm.
And if we're working with you as the broker, we're going to make contributions to the bid on your behalf.
Oh, okay. So what is that, like a percentage of what our
Yeah.
package costs, or how does it work as far as?
For every dollar in premium you pay, we're going to contribute 1.5 cents on the dollar.
Okay, so that's
So I'm really, that's the general thought process. So if your bill's, 5,000 a month, we're sending 75 or 225 a quarter, and we include it on everything. So I don't know what your dues are, and I guess in an ideal scenario, in a sense, I'm being greedy for everybody. We cover the whole thing, and there's money left over, and Mark has to figure out what else to do with it.
We'll find a way. And Paul, just so
Find a
you know,
way.
when
Yeah,
we
that's
get,
not
we
my
get
fault,
a,
but my thinking is that if we can do things to help partner, we do other things. I don't, we didn't get into this on the before, Mark, but a lot of our clients, if they offer, well, really in Pennsylvania, no matter what your size is, you have to offer Cobra, whether you're over 20 or under 20 employees. So I have a Cobra firm on file. I have an ER firm on file, HR firm, excuse me. ER would be, I don't have an emergency room firm on file, but an HR firm we have on retainer for clients. A lot of our clients, if they put in flex plans, or we just did this with, not near you guys, but a law firm with like 20 people, 15, 20 people in Center City, we got involved with. We put in a transit program and paid the admin costs. So their 2/3 of their employees take SEPTA. So now they can take SEPTA pre-tax, and we picked up the admin costs. So everybody wins. We'll do
Paul, just
things
what I was
like
going to
that.
say is when we get notified by Mark that one of our businesses, property owners, et cetera, is using him, we'll get that number so we can factor in, because our goal is give you the savings, give the stakeholder the savings. So knowing that number, we can reduce the assessment. That's first and foremost what we want this sponsorship to lead to relief for. And then we get quarterly statements from Goldmark, knowing what went out and what's coming to us.
Yeah. And then we go from there. And if you, I mean, just in terms of the neighborhood, if you wanted to use as a reference, Greg, Nick, and Al on Frankfurt at Soraya, and Skip was actually the first one, Skip Schwartzman, who I thought would be on the call to make me look good, but he did email and say, use me as a reference. So I am bringing his name up.
Well, I know he's very happy, and
well,
knows to the penny how much we should be reducing his bill. So
well, I text him after I send it to you. I text him before I send you anything. So he likes
and our goal, just so, and Mark and I talked about this again before we ever launched it, before we ever got to the pandemic, we wanted to be able to set up times that Mark or a member of his team could come to the Fishtown district and meet with our people here. Especially now that face-to-face is in, but Mark, what's the best way for people to reach you?
The easiest thing, I mean, you can call us on the phone. The office line is 610-674-0990. You can text me. You can email us. Email, if you just want to get somebody in contact with you, it's going to be me ultimately, but service, the word service at Goldmark Benefits. My direct email is Mark, M-A-R-K, at goldmarkbenefits.com. I'm happy to come to you. I'm down there. When I'm in the city, which is generally once a week, now that they finally opened, I go to Soraya for lunch.
I missed you last time you were here.
Yeah, I know you did. You were with Mike.
I was visiting my mother.
Yes.
So I could.
I also got hooked on the. I'm glad that you got. I don't know everybody's details, but Goldie's opened.
Oh, sure.
Yeah. So with my last name, and that was a nickname, I had to go in and buy everything in there besides the food, the shirts for my daughter. She thought that was great. But I'm also, what Mark didn't mention is that I got involved in Fishtown in the fall of 2007. So it goes back a few years. So I think, Paul, you're Johnny Brenda's.
Yeah.
Okay, so you were the only one there. There was a couple homeless people living in Frankfurt Hall, and I see you laughing. And the weeds were as high as the ceiling in my office. And I was with Roland Cassis. So I invested in Roland in the beginning. So I also separately, I want to see everybody do well, because indirectly or directly, I guess down the road, it'll benefit me, is what I'm getting at. So I also have a vested interest. I put my money where my mouth is at the end of 2007. So it's been a few years. And I have been in Johnny Brenda's a few times for lunch over the years. And so I, I'm familiar. It's not like this is brand new to me. And I want to see everybody do well, because I have some sweat equity in there too, in the neighborhood.
Great.
Any other questions for Mark?
I have a couple of questions.
Yeah, Francis.
Hi. First, can you just repeat your phone number, please?
Sure. If you want to call my cell, 610
Mhm.
733
Mm-hmm.
2057.
Okay, great. Thank you.
Mm-hmm.
Perfect. So I'm one of those super tiny businesses. We have 2 full-time employees. We're about to add a third.
Okay.
So I'm just wondering what it's like to scale. How easy is it to add another person, or if we decide to add part-time employees at some point? And if you can change the employer contribution towards each plan differently.
Well, everybody can do their own thing. So it's
Okay.
not, what you do versus what Paul does is different. Blue Cross, for example, if you're starting a plan from scratch and you don't know what the employee's health status is, the path of least resistance is to put in a plan with Blue Cross, and everybody's a set price based on their age. There's no medical underwriting. If you think everybody's pretty healthy, then we would want to look at Aetna. They fill out a medical questionnaire, and then it's priced as a group, and everybody's price is the same unless they're single versus family. Once you're in and you're set, until the plan would renew. So let's say you started a plan April 1st, whoever you add is the price is what it is until the plan renews. So it's kind of etched in stone for a year. You don't have to stay a year. You could start something in 3 months and then with Blue Cross, and then say, hey, we have 3 people on the plan. I found out afterwards, everybody's super healthy. Can we do better with Aetna and not have to change doctors? And you can do that. So it's with health insurance, as long as you pay the bill, you're covered. And every 12 months, I'm being sarcastic, they'll try to raise the rates on you.
And let's say so the 2 full-time employees are myself and my partner. So we want the business to pay 100% of our health insurance, but we hire a new employee and we want to pay like 50% of their health insurance. Like you can
common.
just do that. Okay, great.
Yeah, but ownership is typically the business pays for it.
Mm-hmm.
And for the employees, it's, you can't do one thing for one employee and not for the other.
Got it.
You used to be able to, and you can manipulate it. And I'd be lying if I didn't tell you that I have people that do that now. And I see that in a lot of, not your area necessarily, but like the law firms. The law firms all have, they have their inside deals with their, with their lawyers versus their paralegals. And certain lawyers are taken care of. And what we report to the insurance company is what we report, that the employer pays, 50 or 70% of the single rate. The employees pay all the dependent rates, or whatever your formula is for that time is fine. But I do see, for example, law firms that'll, they'll have like inside deals for certain attorneys that they want to take care of. And that's reality. So it happens.
Okay, that's helpful to know. Thank you. And then
Sure.
one other question, just because I'm still very new to this, although Mark did ask what telehealth is, so I don't feel like it's a super dumb question.
Yes, right.
Is there any like payroll system or software that you recommend that it is seamless with this? So when we start to pay and we can see those deductions and.
Yeah. There's nothing. The most seamless thing I would tell you is, well, the answer is no. It's seamless with retirement plans, which I'm not. We're not discussing, but for clients, but I do a lot of work with retirement plans. I'm a financial advisor. So what's happened there is that if your payroll is with ADP, or there's a newer company, iSolve, they all have arrangements with the Vanguards and T. Rowe Prices now, or just they're all mimicking what ADP's been doing for years. But the answer is no, sorry. And what you can do is, if it's Blue Cross, you can just make payment online. They're not going to take credit cards. But you can once a month go on and pay your bill online, or have it set up for automatic bank draft. And Aetna will not send you a bill. They're going to do automatic bank draft. So they kind of don't give you a choice.
Okay, so then you have to manually input the amount into your own payroll system for the deductions from their paycheck.
So yeah, so like what I do with my payroll is I went in and I have I pay 100% of the single rate, and I pay 65%. And I'm not saying you should do this for dependents. And so for the 35 that the employee does, we set it up so it's pre-tax for him. He covers his wife, and I just put it in the payroll software, so the money's withheld. But
Okay.
In my case, I'm with Aetna, so on the third business day of every month, they just go into my account and take the money. Basically, I don't have a choice, and it is what it is.
Okay, thank you.
Sure.
Anything else? Actually, yeah, Paul.
I just wonder, so you made sort of an example of a law firm and having different rates. Is there something else for smaller companies to do, like a management group? Is that a common thing? If you have some tiering within your organization for products? Yeah.
So what'll happen is where we see it or use it is you're going to offer more than one plan. So I'm just, from the outside looking in, I'm being stereotypical to your business. You might have a situation where you offer, a silver level HMO to the employees and say, we pay so much of the single rate, and anything above that you pay. And then there's a better plan that's a gold level that we call that a buy up, and you offer it to employees. And if they want it, they can have it, but they have to pay the difference in price. Right. And that's a way to, I think that's what you're asking me, is how can I do something better for the key people who happen to maybe just be the couple owners of the business.
Yeah, that's basically it. Yeah.
Yeah. So a lot of businesses, what they're doing is they might have a separate plan. It's always going to be within Blue Cross. You can't have a plan with some of it with Blue Cross, some with Aetna, some with United Healthcare. That doesn't exist for. They all want 75% of your eligible employees. So you have to be with one company, but you could offer different levels: silver, gold. Nobody does platinum anymore, but and then just have something structured that the people have to pay more to get it.
And one other thought too: how much can you have in an HSA, and do you just start over each year annually, or is there any limit?
I don't have the numbers in front of me. They're actually here out of reach, but generally as a single, you can put in, I think it's 3,000, 4,000, 5,000 a year, and it's cumulative. So you can just keep putting in.
So there's not a limit to how much you can continually put into it.
Yeah. There's no cap, but once you've put in $20,000 over so many years, you have to stop. The cap is much higher. Whether you'll use it towards claims is another issue. If you need a tax deduction, that's great. The upside is, I guess down the road, you can use it to pay part of your Medicare bills. So you can set aside money pre-tax to pay for Medicare down the road. The downside is that, hope it's okay to talk about the negative too. Your money's really going to grow at a fixed rate of interest. The fees on it are high. And a lot of them, when you set up an account, then they start charging you like $2, $3, $2 a month in service fees for doing nothing. And so the concept's good, but it's like I hate. I set one up temporarily in my wife's name, and I hate that every month I get a statement and they're nickel and diming me. It's just not right. Government didn't audit them yet. That's coming, I guess, down the road.
I have one more question. Is it like a 30-day term to either remove someone from your plan or add someone? Is that how that works?
We can add them at any time, within limits. Generally, when you start a plan, you declare how long does somebody have to work for my business, and then they're eligible. So you can't, in today's world, you can't make somebody wait more than 90 days. Those are the laws. So we generally set up your plan. You add and delete people on the first of the month. Somebody would have to work for you for 60 days, and then they're eligible the first of the month thereafter. So that keeps you within the 90. We turn people along the way because people, you might fire somebody, they might find a better job. We offer them Cobra on your behalf. And I answered, I think, part of your question, but not the whole thing. Or did I answer the whole thing?
No, that helps. Thank you.
Anything else, Paul? You good?
Thanks, Mark.
Sure, thank you.
Well, I want to thank everybody for your time today, and this certainly won't be the last. And we'll look forward to Mark finally having you do these in person as we plan them. Again, certainly we want to encourage you to reach out to Mark directly so we can kind of go through the specifics of how to help. It's really a wonderful thing that we've been able to do, and Mark, can't thank you enough. One last thing that I always like to make sure to remind folks from a business district perspective, we believe in the importance of a business owner's ability to provide this type of affordable coverage to your employees. And we always use every effort we can to advocate to ensure that government doesn't do things to, whether it's rising deductible costs or taxation of benefits. If you are interested in joining in an advocacy role in that matter, we could talk about that directly. Certainly reach out to me. My email is Mark, MARC, @fishtownbid.org, or give a call at 267-764-3725, and we could talk how to work together on that. If there's nothing further, I want to let you guys go back and make some money and hopefully enjoy this beautiful day.
Sounds like
Thank you, everybody. Mark, thanks again.
Thank you.